Good morning, everyone. I am KP Malathy, Assistant Professor in the PG Department of Commerce with Computer Applications, Villala College for Women. Today, I want to discuss about the letter of credit, its importance, and its types. So, what is letter of credit? The letter of credit is a specialized technical tool that is applied when paying for shipment of goods or services from one party to another. A letter of credit is a document issued by the bank at the buyer's request in favor of the seller. It guarantees that the buyer will pay the agreed amount of money to the seller within a specified period of time, provided that the seller conforms to the product specifications and document requirements of the buyer. And now let us see the basic functioning mechanism of LC. Buyer and seller enters into a contract specifying their requirements. Stipulating the above conditions, letter of credit is opened by the buyer in his bank of his country. This is the issuing bank which transmits the LC via swift message to the seller's bank in their country, which is referred as the advising bank. Post receipt of the LC, shipment is made by the seller and he presents the documents to the advising bank, which in turn forwards the documents to the issuing bank. The issuing bank now in turn forwards the documents to the buyer. On receipt of the same, the buyer makes the payment to the issuing bank, which is normally deducted out of his account and paid to the beneficiary through advising bank. The buyer takes delivery of goods based on the documents received. And now let us see some of the main parties to the LC. Applicant, the party that organizes for the letter of credit, usually the buyer or the importer. The second party is beneficiary, the party in whose favor the credit is issued, and he is generally the seller, which is normally referred as exporter. And the third party is the issuing bank, the applicant's bank that issues its undertaking to the beneficiary in the form of letter of credit. And the fourth party is the advising bank, the bank usually in the beneficiary's country, which informs the beneficiary that another bank has issued letter of credit in their favor. And now let us move on to the importance of letters of credit. International trade includes factors such as distance, different laws in different countries, and lack of personal contact, so that letter of credit makes a reliable payment mechanism for them. So it is a secure way for the businesses to trade, as it offers protection for both the parties involved in the transaction. It helps to remove the deadlock between both the parties. And now let us move on to the different types of letters of credit. The different types of letters of credit were irrevocable LC, revocable LC, confirmed or advised LC, unconfirmed LC, transferable LC, standby LC, back-to-back LC, payment at site LC, deferred payment LC, and red class LC. And now let us get into the deeper insights of the same. First is irrevocable LC. This LC cannot be cancelled or modified without the consent of the beneficiary, that is seller. The second is revocable LC. This LC type can be cancelled or modified by the bank issuer at the customer's instructions without prior agreement of the beneficiary or the seller. The bank will not have any liabilities to the beneficiary after revocation of LC in this type. The next is confirmed and unconfirmed or advised letters of credit. When a buyer arranges a letter of credit, they usually do so with their own bank. It is known as the issuing bank. The seller will usually want a bank in their country to check that the letter of credit is valid. For extra security, the seller may require the letter of credit to be confirmed by the bank that checks it. By confirming the letter of credit, the second bank agrees to guarantee the payment even if the issuing bank fails to make it. So, a confirmed letter of credit provides more security than an unconfirmed one. In case of unconfirmed LC, the advising bank forwards an unconfirmed letter of credit directly to the exporter without adding its own undertaking to make the payment or accept the responsibility for payment at a future date, but confirms its authenticity. The next is transferable letters of credit. What is transferable letter of credit? A transferable letter of credit can be passed from one beneficiary, the person who receives the payment, to other. They are commonly used when intermediaries are involved in the transaction. So the next is standby LC. A standby letter of credit is like a guarantee that is used as a support when an alternative, less secure method of payment has been agreed. It is an assurance from the bank that a buyer is able to pay the seller. The next is revolving LC. The revolving letter of credit is used for regular shipments of the same commodity to the same importer. It can revolve in relation to time or value. If the credit is utilized, it is reinstated for regular shipments until the credit is fully drawn. If the credit revolves in relation to value, once it is utilized, the paid value can be reinstated for further drawings. Revolving letters of credit are useful to avoid the need for repetitious arrangements for opening or amending the letters of credit. The next is back-to-back LC. A back-to-back letter of credit can be used as an alternative to the transferable letter of credit. Rather than transferring the original letter of credit to the supplier, once the letter of credit is received by the exporter from the opening bank, it is used as a security to establish a second letter of credit drawn on the exporter in favor of his importer. Many banks are reluctant to issue back-to-back LCs due to the level of risk to which they are exposed, whereas a transferable LC will not expose them to higher risk than the original credit. This LC type considers issuing the second LC on the basis of the first LC. LC opened in favor of the intermediary as per the buyer's instructions, and on the basis of this LC and instructions of the intermediary, new LC is opened in favor of the seller of the goods. The next is payment at site LC. According to this LC, payment is made to the seller immediately, maximum within 7 days after the required documents have been submitted. And the next one is deferred payment LC. According to this LC, the payment to the seller is made when the documents are submitted, but instead at a later period defined in the LC. In most cases, the payment in favor of the seller under this LC is made upon the receipt of goods by the buyer. The next is red class LC. The seller can request an advance for an agreed amount of LC before the shipment of goods and submittal of the required documents. This red class is so termed because it is usually printed in red on the document to draw the attention to the advance payment term of the credit. As the biggest reward for globalization, international trade increased across the globe. Hence, LCs acquired more prominence in the current era. Let me finally conclude by highlighting the future aspects expected out of this LC. While banks and their corporate clients are already aware of the need to move away from the paper and manual processes, the imperative to digitize operations has recently grown exponentially. The current economic climate, businesses may find challenging to satisfy their financial obligations, particularly those linked to letters of credit. As the economy slows down, banks are considering digitizing letters of credit to improve their risk assessment. More focus has to be laid by the bank on digitizing letters of credit and their related processes. Thank you.